baby. 2 Chicago wins. I'm here with Sell Puts, Evan McDaniel. I'm the killer, Jeff Kilburg. We got a lot to talk about, folks. We're looking at this market as it continues to move over in Europe. But the focus today, we talked about, he's been tweeting about excessively. You are an excessive tweeter, but I love it. And a lot of people appreciate it, so thank you for all your tweets. Yep. But we have been talking about this crude oil situation. Can you walk us through the crude oil, Evan?
Yeah, overnight, we basically broke that 100 level, everyone's psychological level, technical level, fundamental level, and we basically ran straight up to 102.29 in the spot. So I was talking about the USO. We're up near that 40 level. If we can hold over the 40 level, I think we can potentially go higher. You can see the Amex oil index is up, now over 0.5%, almost 8 points. So there's drivers behind this trade, whether it's a reverse pipeline or it's fundamentals. Whatever it is, don't step in front of the train.
Sure, and some of the conversations we've had, folks, is about this chowder. And if you're not familiar with what chowder is the conversations and the chatter that goes around between hedge funds. A lot of the chowder was, if we rewind just a little bit, when that $91, $92 level, there were some hedge funds blowing up. They were blowing out their positions, really move these markets. So are shorts on the run, or is this a technical move? Because I don't know if we're going to be able to sustain these prices above $100, but no doubt about it, you don't want to be a hood ornament.
Exactly. That's the thing. Stepping in front of the momentum of a commodities market like this in a trade where people are unsure, there could be people blowing out, being forced out of positions, or combine that with technicals, that can create a perfect storm that can send this even higher. No,
for sure. And just to rewind, folks, all the way back to Europe, this European situation persists. And right now, our focus is on Italy, no doubt about it. Spain right behind it. What I've been talking a lot about lately was France. Last week I hopped on CNBC, Squawk on the Street, and the trade I proposed was you have to buy these U.S. Treasuries and sell these French 10-year yields, because the French 10-year yield was just under 3% of the time. We've seen this rocket up. So we're seeing these peripheral countries, which we didn't think was such a problem. Obviously, France, with their AAA rated, will they get downgraded? Do the ratings mean anything more? But what is the play there, and how much longer is this going to persist? Is the rate play on?
I think the right play might be on. What I'd like to think about is time. We're going to have to let this play out. We don't know. It seems like a lot of people are blowing smoke. The only thing I think is time. Let this play out. Don't trade what you think. Trade what you see.
For sure, but when does the market demand something? When do we need something out of Germany? Merkel is trying to get her house in order, and Germany obviously is driving the boat. But at what point does the market just beat down? Because right now we are seeing these Italian bonds north of 7%. That's not only not sustainable, it's insolvent. Those borrowing costs, they're talking about austerity, this new government implementing. But if they implement this $83 billion they're talking about, that's fully negated with the borrowing costs above 7% of the 10-year. So when does this moment happen, either good or bad?
I think, it's like you said, we're going to reach the point of unsustainability and something's going to blow. And when it happens, I think it's going to happen quick, and it's going to happen when we least expect it. So be on your toes.
No, for sure. And on the flip side, we have seen some data pick up here domestically. Earnings were not that bad. So there is a little bit of a silver lining here, folks, in the U.S. economy. But no doubt about it, the contagion in Europe is dragging us down, and people are on pins and needles. Anything else you want to add in this euro currency? Because I know this euro currency has been a big play here. It came all the way down, made a new low.
Yeah, you got to take a look at the dollar. The dollar is still holding firm despite oil's strength and a little bit moderate equity weakness. There's something driving this trade, and there's clearly forces that we aren't seeing that are moving this market. So, keep aware of the 78 level in the dollar, and keep aware of, look for the euro to possibly make new lows here in the near future.
No, for sure. And one other thing, folks, you need to remember, I know we're at the NASDAQ site here, great venue here in Times Square, but you have to remember, be the hammer,
not the nail.
You'll have access to all the good, cool, free stuff on optionmonster.com. All you got to do is sign up.